Now it's time to bring in our next guest, Mike Burleigh, president of Peak Capital Management in Jensen Beach, Florida. Michael has over 30 years of experience as a financial advisor, is a great friend of the income generation, and for the second time today, is a good friend of yours truly. Mike, thank you so much for being here on the show with us today.
Thanks for having me, Dave. Glad to be here.
So we're talking about education and the importance of education in the financial world. You heard Matthew talk a little bit about kind of in the broader sense. Can you dive down a little bit and just talk to us about more specifically, some of the more specific areas where you find that members of the income generation specifically really need more education about the financial markets?
I think the most important consideration is going from the accumulation phase of their money to the preservation and distribution phase. This is one of the most important things they can do. Now, what does that mean? Well, typically when you're growing your wealth and you're in your 50s, maybe early 60s before you retire, you're going to be more in a stock market type portfolio. This could be a combination of mutual funds or common stocks. Well, it becomes very difficult when you get in or near retirement to live off common stock or mutual fund income. There's just not enough there to supplement, say, Social Security.
So what do people do then? How do people typically take income from mutual fund portfolios? Let's say they leave their money in a 401k and they start to draw on it. What's so bad about that?
Well, typically that would be a liquidation method of your account. And over a period of time, you could liquidate your account. You're betting or gambling, if you will, that the stock market's going to go up enough each year for the rest of your life to sell shares to live on. And we all know over a long period of time, the odds of that happening are really slim to none.
So you literally are selling principal because you're actually spending shares. But in the 30 seconds or so we have left in this segment, it's actually worse than selling principal, isn't it, Mike? I mean, what if the market goes down while you're taking income? How does that affect investors?
That's a good point. That's something called reverse dollar cost averaging. And if the market goes down, you actually have to sell more shares to get the same check that you did the prior year. So it can be a cancerous strategy in a retirement account.
Sure. And remember, you want to buy low and sell high, right? So if you're being forced to sell more shares when it's down, that's the last thing that you want to do. So we're going to take a commercial break. When we come back, I want to ask you about how that affects people who are 70 and a half or over taking required minimum distribution. So Mike, stay with us, and you stay with us too. We'll be right back here on the Income Generation. Welcome back to the Income Generation. I'm Dave Scranton. We're here today with Mike Burleigh, president of Peak Capital Management from Jensen Beach, Florida. Mike, thanks for sticking around.
Thanks, Dave.
And tell us about RMDs. You know, somebody says, I don't need any income. I retired at 60. Now at age 70 and a half, the government forces me to take withdrawals. I shouldn't have to worry about that, should I? What do I need to know about that?
Well, you do have to worry about that, Dave, because when you hit that magic number, 70 and a half, the IRS requires that you take distributions out of your qualified retirement accounts. Look, we've been able to put money in these accounts for years, defer the tax, and the question is, has Uncle Sam gotten paid on these accounts? And the answer is, he hasn't, but he will. Hence the retired minimum distribution. So we're forced to take money out of these retirement accounts, really whether you need the income or not. And again, if you're forced to take money out of an account that's loaded with stocks and mutual funds, you're going to have to sell your account every year to get a check. And over the long term, that's not going to bode well for the account.
So a lot of reason people are in mutual funds is because they grew up in the 80s and 90s, the best stock market in U.S. history. Yeah, they had a couple drops with the financial crisis, before that, the tech bubble. But even the last 10 years since the bottom of the financial crisis, the mutual funds have gone up. So when you get some investors coming in who really just have been in the market their entire lives, they love the market, and they're taking money out of principal because they don't know anything else, how do you use education to help to get them to realize the risks inherent in the strategies that they're utilizing?
Well, you have to look back at the long-term patterns of the stock market and educate investors on these long-term patterns. There's long-term periods of growth, and then there's long-term periods of where you have no growth in the market. And these patterns can run 15 to 20 years of no growth. So it'd be very difficult if you have no growth in a 20-year cycle to live off a 2% dividend. So the educational process becomes very important. And once you're able to educate a consumer that, hey, look, the market is not always going to go up. Yeah, we've had a good run the last 10 years, but that doesn't mean the next 10 years will have
Right.
that type of growth.
So 30 seconds, Mike. What are your final words of wisdom that you have for income generation viewers?
The most important thing you can do when you're in or near retirement is make that transition from the accumulation phase of your money to the preservation and distribution phase of your money, so you do not run out of money in retirement, which is the number one fear retirees have today.
And that is why you're helping me and Matthew and others carry that retirement income store flag across the finish line, for which I'm very grateful for your part in that. And Mike, thanks for being on the show today.
Hey, thanks for having me, Dave.
All right, stay with us. We'll be right back here on the Income Generation in just a minute.